Thanks for joining us on Parliament. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get to the headlines. Indian markets retreat from record highs, dragged down by the weakness in banking and pharma stocks.
Ruchi Soya has been stuck in upper circuit today after its lenders approved Adani Wilmar's bid for the company.
The National Company Law Appellate Tribunal has refused to pass any interim orders in the Mistry versus Tata Sons case.
Former RBI Governor Raghuram Rajan isn't too worried about the depreciation of the rupee. He says India should focus on strengthening its macro fundamentals.
Indian athletes keep India's medal tally clicking at the Asian Games, with rowers and tennis players leading the charts.
Also on the show today, Sunil Kumar Sinha of India Ratings tells us why rural wage growth is no less important than doubling farmers' income. We'll get to that a little later on the show.
All right, let's first take a look at how markets are faring. Neeraj is here with us as always. Afternoon.
Hey guys, afternoon. So, well, banks it is yet again, which are looking like a bit of a problem for the markets today. Though pharma is giving it company and large cap pharma is correcting. But if you just look at that picture, Nifty Bank about 2/4 or 2/3% in the red versus the Sensex and the Nifty about 1/3% down. And private banks, save for Kotak, the other private banks are correcting. So the likes of IndusInd Bank and a couple of others, ICICI Bank is down in the red today. Kotak is up in the green. That's the only one. But the otherwise, some of the large private sector banks have come off in the session today. The Nifty Bank F&O picture is also very interesting. If you just pull that up with the kind of OI positions that exist in the Nifty Bank, the last 5 or 6 sessions, there has been significant long unwinding that we've seen almost every single day. The existing long positions got unwound in today. We've seen a healthy bit of short positions being created on the Nifty Bank. So do watch out. This period has gone on for a while. A lot of people have been now talking about how the last 2 days that there might be some bottom buying out here, but that is not happening. And with the fall that we've seen, there's some further short positions, then that could create further pressure on the markets. And that aside, pharma, large cap pharma has looked under pressure today. So Sun Pharma, Cipla, Lupin, remember they were up and about day before yesterday and a few days before that. But in today's session, some bit of a pullback. The only solace, not even a solace really, but the only one which is actually making a meaningful move on the upside is ONGC, which is up about a couple of percentage points in trade. The broader end of the spectrum, guys, almost nothing happening out there. The top gainers, I mean, forget the small cap space, which has got very sketchy names, not too many movers aside of Hexaware, which got punished because of the block deal. But even the mid cap end of the market, the gainers have a % or 2 kind of gains, percentage kind of gains. The losers 2 or 3% off. So fairly muted trades in the broader markets too, and volumes starkly lower than what we saw in trade yesterday. Arguably, of course, yesterday was the Nifty Bank expiry. But yeah, volumes too slightly tepid in the session today.
Neeraj, thank you for that. That's the markets for you. After a long delay, the Committee of Creditors for Ruchi Soya approved Adani Wilmar's bid for India's largest edible oil maker. The company outbid Patanjali, who emerged the second largest bidder. Vishwanath is here with some more details. Vishwanath.
Right, Asha. So what we understand from our sources is that there was a bidding process that lasted for 24 hours. It ended last evening, and Adani Wilmar has beaten Patanjali in that bidding process. They've got about over 96% of the Committee of Creditors votes. Remember, 66% is that threshold where they win the bid. Adani's bid involves about a 4,300 crore repayment to the bankers, as well as about 1,700 crores being pumped into the company in the form of fresh equity. Patanjali's bid wasn't very different. It was slightly less for the bankers, about 4,000 crore, but the 1,700 crore fresh equity infusion was pretty much the same. Yeah, but you know there were some delays there. We wrote a story a few months back about how Section 29A was being invoked in this case, and how Patanjali presented their reservations for Adani's qualification. But of course, that seems to be now a thing of the past. But the case will now go to the NCLT for a final approval. Depending on what Patanjali does at the NCLT, if they oppose this approval, then the matter could get delayed further. But otherwise, things seem to be set for Adani Wilmar at this point in time.
All right, Vishnu, thanks for that. The National Company Law Appellate Tribunal has refused to pass any interim orders in the Mistry family versus Tata Sons case. The 2-judge bench has opined that the Mistry family can't be forced to sell stake in Tata Group's parent company. Neither has it put a stay on the conversion of Tata Sons into a private company. The NCLAT will start hearing the Mistry family's arguments in about a month from now.
Underlying conditions in the global economy are fragile, says former Governor of the Reserve Bank of India, Raghuram Rajan, especially in emerging markets like Brazil, Argentina and Turkey. He stresses on the need for countries to get their macros in order. On India specifically, Rajan says the problem lies in the current account deficit, with growth largely in India's favour. He thinks the focus must be on the macros as well. Listen in to a slice of this conversation.
We're all very well aware that two things have built up, which had built up before the previous crisis: leverage and asset prices. And both are at pretty high levels. I mean, we thought that after the crisis of 2008, we'd bring down leverage. We haven't. It's moved from some balance sheets to other balance sheets, but overall it's increased. And then asset prices. I mean, we just had a record for the S&P 500 just the other day. So I guess the concern is that, yes, things have been reasonable so far over the last couple of years. Growth has been strong. But how long can it go on? And does it fit with the kind of prices we have and the kind of leverage we have?
Well, you know, 2.5 months ago, you warned about the risk of a kind of toxic mix: rising rates and some, quote, untoward action on trade. The Federal Reserve is on track, it seems, for 2 more rate hikes, September and December. The U.S. and China continue to barrel down this tit-for-tat path on tariffs and more. Are you raising a red flag yet, Raghu?
Well, I think the underlying conditions are fragile. And that's why I raised the issue of leverage and asset prices. Now, you hope growth carries us forward. But of course, actions on trade on either side would be a very strong headwind to that growth. And that would be a source of big concern. But also, we've seen some of the emerging markets are highly levered. Some of them have elections, Brazil, for example. And a lot depends on what the new administration then decides to do. We've seen Turkey, we've seen Argentina. What more is there? Now, my sense is it's not a systemic issue yet amongst emerging markets. It will be outliers, but there are outliers. Countries that haven't used these years to get their fiscal in order, to get their current account deficits in order. And of course, commodity prices going up helps one set of countries, commodity prices going down helps another set of countries. So there are vulnerabilities in the system.
At this conference, again, official topic, market structure regarding productivity and, the rise of online shopping, et cetera, what it means. But one of the unofficial topics, I think, and there's many people from emerging markets here, do you think they'll be having conversations about, hey, what's going on in the U.S.? These rate hikes are putting pressures on us. And at what point does the Fed acknowledge that or have it make a difference?
Well, I think the rate hikes have been signaled quite clearly by the Fed for some time. And countries should have adapted to that. What they haven't adapted to, however, is the great uncertainty created over trade. Because remember, emerging markets are very highly dependent on trade also. And so, for example, indirectly or directly, many of them export through China. If China then becomes subject to a lot of tariffs, then you have China slowing down, but then everybody who went through China also slowing down, and that creates a toxic mix when you combine that with the rate hikes and the leverage they already have.
Would you say this is one of the biggest risks to Asia broadly? I
think trade is an issue for the world to be concerned about, and it's extremely important that we have good outcomes there. By all means negotiate, but don't pull the nuclear trigger there. Well,
we've certainly seen a direct impact on India, and that's the weakness in the rupee hit an all-time low last week. It's forced more rate hikes maybe than would otherwise have happened. If the dollar keeps rising, there could be more of this. And of course, India already has a widening current account deficit, widening fiscal deficit. Do you think the authorities in India will have to do more to support the rupee?
Well, just to be fair, the Indian authorities have brought down the fiscal deficit. What has expanded is the current account deficit, a lot of it driven by the higher oil price. And that's why I said commodity prices do have an effect. Now, the rupee has depreciated. Now, I think it hasn't depreciated at too worrying levels. It's sort of dollar strength around the world. And to some extent, the rupee over time hadn't depreciated enough because of the higher than world inflation in in India. All that said, I think this is a time where countries should be focusing on getting the macro in order, on getting macro stability. And going into an election year as India is, as Brazil is, it's very important that all these emerging markets try their level best to look as good as possible.
Well, you know, an interesting story in India lately is the release of this unofficial data, which showed that under the previous administration of Mr. Singh, growth was much higher than it is under Mr. Modi, and there's been a lot being, you know, is Mr. Modi now doing enough to help all those Indians who need to be lifted out of poverty, etc.? How is that going to play out? Is this a little tempest in the teapot that we in the media are stirring up, or is this important?
Well, I'm on the side of, well, what we have to do right now is look forward. And India is recovering from a slowdown in the last couple of years. It's growing at about 7.5%. Now, you know, most countries would kill for 7.5% growth rate. So that's in India's favor. What it needs to do is also make sure that the current account deficit doesn't blow out. It needs to maintain fiscal stability. And then I think it gives a picture of, you know, strong growth, but reasonable macro. That's a good thing to have at this point.
What about the banks? The latest financial stability report from the RBI showed gross non-performing loans still rising. Banks' earnings show them piling on more losses. Can they come out of the rut on their own, or will they need more help from the government? Maybe some capital infusion? What needs to be done?
I think there is some capital infusion on the way. I do think that we do need to improve the governance of these banks. This is a major reform, has to be done. My sense is whichever new administration comes in, this will be task one for them.
Right, former RBI Governor Raghuram Rajan there. Now the Indian currency is hovering around the $70 mark, and it is bound to impact, well, it could impact certain companies in different ways. Darshan Mehta is standing by with a sense of which are the sectors and companies that could potentially be impacted. Darshan.
Yeah, so basically if you're looking at it, first the slide does indicate how the dollar has actually, the rupee is moved against the dollar. The last time a big spike came in was in 2013 where you could see it. And again, we are now at levels of 70. So there seems to be a big spike as far as the dollar is concerned. But how does it firstly impact the Indian markets? Because the dollar is down almost, the rupee is down 10% against the dollar. The Nifty has managed to move up almost 10% on a YTD basis from the start of the year. But look at the Nifty in dollar index, it's actually given nothing. It's up just 0.12%. So FIs who put their money in dollars, they haven't made anything on the Nifty despite the Nifty moving up almost 10%. So that's the thing that we're seeing. What does the weaker rupee indicate? That, you know, it may accelerate FI outflows into from the country. Could be equity, could be debt. Increased volatility in equities. And finally, what is playing the joker in the pack is that crude prices are also not coming off. They are higher, and that will add to the impact of what we've seen currently. Now, who benefits, who does not benefit? That's something that we need to see. The exporters benefit, the importers lose out, and firms with a large forex debt actually lose out on this front. Firstly, if you're looking at it, some of the sector-wise impact, IT is something. So $1 depreciation on the 1% depreciation on the rupee against the dollar means a 20 to 25 basis point jumps in operating margin. So far in the second quarter, we've seen a 2% jump, which will mean that anywhere between 40 to 50 basis points will be the increase as far as the operating margins for IT companies are concerned. Obviously, unhedged income will also rise for the company, but most of them have exposure which are usually hedged. The second pack is the pharma pack, which definitely benefits significantly. Out of this, Divi's Lab is the one that benefits the most because they have sizable exports and they don't have a hedge. So they definitely benefit because of the dollar. Companies like Aurobindo and Biocon have high foreign exposure, high exports, but they have partly hedged. So that will benefit them, slightly lower than Divi's. The third rung come in the generic companies, Dr. Reddy's, Sun Pharma, Cadla, Lupin, and all the entire. They benefit on the export front, but they also have a large India exposure. So that is where they don't benefit. And what doesn't benefit is the MNC Pharma because their import bill goes up significantly. The next pack that we want to speak about is the metal pack. Higher realization in exports will definitely help them, and domestic prices depend on import parity. So that is something that benefits. So companies like, you know, your Hindustan Copper as well as in Nalco, they benefit because their realization are in dollar, but their costs are determined in rupee. Companies like Tata Steel, Vedanta, Hindalco, all of them get impacted negatively because their costs are there, because they have dollar denominated debt, and the non-ferrous players, the realizations are dollar denominated, and that is why they benefit significantly. So these are the companies that definitely benefit because of the higher dollar compared to the rupee.
Who don't stand to gain, Darshan? Who won't be happy by this weaker currency?
Yeah, so aviation doesn't benefit because 60 to 70% of their costs are dollar denominated. Most of the crude that they buy is because of dollar. And look at the forex loss that they've put in the first half of the calendar year. Indigo almost 340 crores forex loss. SpiceJet 66 crores. Jet has just hasn't reported the first quarter number, so this is just the fourth quarter number, but yet they have reported a forex loss. So aviation doesn't benefit. The other fact that doesn't benefit is the fuel retailers, because crude is bought in dollars. No doubt they partially offset it and they pass it on, but nevertheless the impact is not positive for the fuel retailers. The other sector that we want to talk about, and this is the forex loss that the three oil marketing companies gave up because of how the rupee has behaved. The other sector we want to talk about is the paint. 50% of the raw material is dollar denominated, so be it titanium dioxide or be it crude, the raw material is getting impacted. And look at the gross margin trends that we've seen for all the paint companies. They've come out from the high 50s to the low 40s, or probably even in the high 30s at this point of time. So the trend seems to be on the negative side for the paint company. A couple of the other distribution players like Dish TV are impacted negatively because of their capex, especially set-top box are dollar denominated. And cement is another sector which actually gets impacted negatively because imported coke and diesel are dollar denominated. Companies like India Cements, which have high dollar debt, are also negatively impacted.
All right, Darshan, thanks for that. Private equity major Bearings Private Equity Partners in Asia is looking to sell stake in Hexaware Technologies. The stock has fallen over 13% post this announcement. Nikki Mirchandani has the details.
The promoters well are looking to raise around 1,120 odd crore by offloading around 8.4% of equity. Bearing PE Partners is looking to sell around 2.5 crore shares via block deal at a floor price of 447.5 per share, which indicates a discount of 10% as per the previous closing market price. Now, do bear in mind the fact that the stock has already slipped as much as 19% odd in the trade. Well, the full own arm of Bearing in total holds around 72% stake in the company, and Citigroup Global Markets are the sole placement agent for this deal. If you look at the overall shareholding pattern, the promoter entity stands at 72% and public shareholding is around that 29% kind of a level. IIFL separately has initiated a coverage on this counter with an ad rating and a target price of around 520. It says that the stock is now a good long-term compounding story, and margin expansion are expected to be a key to rating. In terms of the key growth drivers, it sees a healthy deal wins, steady growth in top accounts, and stable margins as the key EPS driver for this company. However, if you look at the analyst rating presently on this stock right now, 60% of the analysts have a sell rating on this counter with a return potential of more than 13% the last time I checked.
Okay, thank you so much for that. Let's move on now. An equal focus on both rural wages and farm income is vital to relieve rural distress. That's according to India Ratings. The government is committed to doubling farm income by 2022, but this may not be enough because the largest chunk of rural population is made up of daily wage earners and not farmers. To talk about this, Sunil Kumar Sinha, Principal Economist and Director at India Ratings and Research, now joins us. Sunil, thank you so much for joining us on Bloomberg Quint. You make that important distinction between what is rural wages and what is farm income, and the government's focus on farm income. What, to your mind, at least what you found, what is the real situation on rural wages at this point in time?
Well, as we have indicated in our report, the rural wage growth has been quite stunted in last few years. There is a lot of talk currently going on, and government also has been saying that they are committed to doubling the farmers' income by 22. But if you also look at a report which has recently been published by one of the public sector unit, then it is quite obvious that 1/3 of the rural income is actually non-agricultural income. Simply focusing on agricultural income probably will not address all the problems which rural area is facing, and which is what is being largely called as rural distress. A large component of that also relates to what's happening to both the agricultural as well as non-agricultural wages in the rural areas, and there we found that in the last couple of years the wage growth, the real wage growth, I mean adjusted for inflation, has been almost flat, which simply means that the purchasing capacity of the wage earners are not simply going up, it is stagnant, which simply means that they cannot improve their overall standard of living. I mean, they are where they are. On the contrary, it should have improved over a period of time, and when they compare their own livelihood vis-a-vis what has been the trend in the past, then certainly they feel that they are in a very, very difficult situation.
Sir, good afternoon. Ira joining in as well. In your research, was there any sort of linkages between, farm income, minimum support prices and wages? I asked because, it could be argued that if, overall incomes on the farm side are higher, then perhaps the ability to pay wages would be greater. Is there any linkages, sir?
Definitely, if one looks at the way the MSP has unfolded over the last couple of years, then we know that till about 14 or 15, the MSP prices were rising almost in relationship with the input cost, or in other words, I mean, namely what was happening was that the MSP was getting increased by a substantial amount. However, this was also the period when food inflation was pretty high. So a lot of commentators felt that part of the reason for higher food inflation is also the fact that MSP prices of food grains are being increased on a year-on-year basis much higher than what is required. As a result of that, I think the first 1 or 2 years of the present government, we saw that the MSP price increase were somewhat on the lower side as compared to the earlier years. So if you really look at the real wage growth from fiscal year 12 to fiscal year 15, then the real wage growth was almost close to 10%, and nominal terms it is about 20%. But when we look at the period of fiscal year 16 to fiscal year 18, then this period, the overall real wage growth has been almost flat, just 0.45%. So certainly part of the reason, of course, relates to what is happening to the MSP prices in the recent years.
Okay, Mr. Sinha, explain this to me. This government allocated or made its highest ever allocation to Manrega. How is it then that not being reflected on the ground as far as non-agri wage growth is concerned?
Look, I mean, if you go back and look at the higher Manrega allocation was done immediately after the demonetization. So clearly, had this allocation not been made, probably you would have seen, wages, coming under more pressure than what the data is currently showing. So to some extent, this has only protected the rural wages from falling below the previous year, and in real terms, not really increasing. So, I mean, I guess there is a lot more that needs to be done, and also the fact is that the way the agricultural productivity should increase, it has not been increasing in the last couple of years. So typically increase in MSP is only covering up for the increase in the input cost. It is not giving them any additional bandwidth through which they can actually offer maybe a higher wages to the wage earners.
So just the last question for me, I think this rural puzzle continues to be fairly complex. I think some of the differences that you have pointed out in your report also perhaps are playing out in other ways. For instance, you don't see weakness in demand indicators from companies which sell to rural areas. You've seen strong tractor growth. Even the FMCG companies, which is smaller ticket purchases, are starting to show traction in rural. On the other hand, like you pointed out in your report, wage growth has been weak, so there is some weakness clearly in rural areas. It is a bit of a puzzle still what is really happening in the rural economy, isn't it?
When you look at the rural economy, you must also understand that agricultural income is only 1/3 of the total rural income. I mean, in other words, the contribution of agricultural income to the overall rural income is only 1/3. The 2/3 of the rural income is actually non-agricultural income. So somewhere one has to understand as to what is happening in the rural areas with respect to the non-agricultural income. A lot of rural areas are in the vicinity of Mufassil town, or there essentially the income is not getting generated in the rural areas. Essentially they are coming from outside. Similarly, there are states where a lot of income which actually goes to the rural areas, say for example in places like Uttarakhand, is essentially what is called post office money. So, and that is also true for, say, example in Kerala. And similarly, if you try to understand, and also the fact that services sector are the largest sector in our economy, a lot of these small shops, whether they are selling mobile prepaid coupons or they are selling some retail items, have come up in the rural areas. So these are the occupations which are somewhere supporting the livelihood in the rural areas. I mean, minus that, situation would have been even more precarious than what we are witnessing right now. So those are somewhere creating some kind of a balance, and also the fact that higher MSP prices largely favors those who have land holding which is, say, more than 5 acres or more than 10 acres. So they are the ones who are appropriating the advantages of the higher MSP prices. So all of this, if you put together, is what is somewhere getting reflected in either the FMCG product sales, or for that matter tractor sales or motorcycle sales.
Okay, Mr. Sinha, we'll leave it there. Thank you so much indeed for joining us with your perspective. That's Sunil Kumar Sinha from India Ratings. Let's talk about sport and Asian Games. What started with some heartburn with the Kabaddi team having to settle for bronze is fast proving to be one of India's most successful days at the Asian Games. India's rowing team bagged 2 medals. The men's quadruple team won a gold, while the men's lightweight doubles team of Bhagwan Singh and Rohit Kumar secured a bronze. India's also bagged the top honours at the men's tennis doubles as well. Rohan Bopanna and Divij Sharan winning the gold medal. Shooters continue to be on target, with the Commonwealth gold winner Hina Sidhu winning a bronze at the 10-meter pistol event. The women's Kabaddi team, meanwhile, has gone to the finals and is looking to for the 3rd Asian Games gold this time.
That's a wrap on this edition of Power Lunch. Thanks so much for watching.
Lots more coming up. Stay tuned to Bloomberg Quint.